Hello, today we're going to talk about the merger and acquisition deal between Nvidia and Softbank Group Corporation and the impact on the financial statements. Nvidia Corporation is an American multinational technology company incorporated in Delaware and based in Santa Clara, California. It designs graphic processing units for the gaming and professional markets, as well as the systems on chip units for the mobile computing and automotive market. Softbank Group Corporation is a Japanese multinational conglomerate holding company headquartered in Tokyo. Softbank owns stakes in many technology, energy, and financial companies. It also runs Vision Fund, the world's largest technology-focused venture capital fund with over $100 billion in capital. ARM Holdings is a British semiconductor and software design company based in Cambridge, England. Its primary business is in the design of ARM processors as well as software development tools. In September of 2020, Nvidia acquired ARM Limited from SBG and the SoftBank Vision Fund in a transaction that valued $40 billion. Before the merger and acquisition, Nvidia has been a brand name in the technology space for 26 years. Their work on modern computer graphics and AI technology has been the industry standard. It is no surprise that before their acquisition of ARM Holdings this year, that the company's financial conditions has been overall positive. A company's quick ratio for the 2019 fiscal year is a good indication of the company's financial health. Nvidia has a ratio of 6.83. The ratio is about 5 times higher than the overall industry average, which shows that their liquidity and financial health is very good relative to their competition. Their current ratio of 6.83 was also extremely high compared to the industry average, which was 1.13 for 2019. Both the current and quick ratios show that Nvidia's ability to pay back their debt is high. Nvidia's positive financial position is shown through the return on assets and return on equity ratios. Their ROA was 16% with the industry average at 5.8% in 2019, and their return on equity was 23% with the industry average of 7.2%. Their ability to use their assets and equity to generate income is high compared to their competition. Now we're going to take a look at ARM Holdings' financial condition for merger and acquisition. SoftBank Group Corporation acquired ARM Holdings in 2016. Nvidia Corporation dealt with ARM Holdings in this 2020. The financial statement of SoftBank Group Corporation shows that it had a net loss of $960.98 billion in the fiscal year from March to April of 2020. During the fiscal year of 2019 to 2020, SoftBank Group Corporation had a big amount of expenses, including operating expenses at $3.46 trillion and unusual expenses at $759.93 billion, which were a total of 43.6% of sales revenue. Non-operating expenses were $3,291.16 trillion, which was 47% of sales revenue, so it came out to the $960.98 billion net loss for the 2020 fiscal year. SoftBank Group was not efficient enough to make enough revenue to cover the huge amount of expenses. This deal could make Nvidia a strong competitor to Intel. Nvidia and its graphic chips have not been competitive to their microprocessors. However, they have been competitive with their graphic chips. This push into microprocessors could be a real challenge for the Silicon Valley. Usually, under accounting rules, any cost that you incurred to carry out the acquisition is considered as a part of the purchase price. As so, they would go into the balance sheet as capitalized costs, but not in the income statement as expenses. However, SoftBank Corporation has lost money on investments in companies like Uber and WeWork. Also, SoftBank Corporation shares lost values because it has taken large stakes in tech giants, which made it suffer a loss in the stock market value in September. It is unknown how much SoftBank Corporation it would make in the sale since it invested in ARM Holdings. In this case, Nvidia has to take on all the target company debts and liabilities, whether they knew about them at the time of the sale or not. So they will be responsible for them after the acquisition. Thank you.